Yes, very good evening to all of you. Yes, very good evening to all of you. Yeah, very good evening. Gomati, Shiva Chaitanya, Nivedita, Minu, Ravi, Satish, all of you, very good evening. Ishwar, very good evening. Abhishek, so namaste. Jack, very good evening, ma. Prachi, very good evening. Minu Kumari, very good evening, all of you. Adarsh 143 Gudivada. Yes, you can contact me in a WhatsApp. We can discuss about it. So you are asking, sir, in one problem, share of partnership form is loss from the partnership form is there. That we can't set off, man. Because if we are getting the share of profit from the partnership form, that is exempt. In that source only, we are getting loss. That loss is not eligible for setup, like agricultural income only. If you got an agricultural income exempt, if you have an agricultural loss, you can't set up with the any other heads. That is only the point. Okay. Now, without delay, we can start our discussion, ma. Okay. So today our agenda to discuss the business restructuring and reconstruction topic. So definitely the many students are waiting for this concept, I know. Yes, what is that weight is? So definitely we can get 7-mark question. If they are given an MCQ, totally 9-mark fixed. 9-marked fixed MCQ. Yes, if you have any doubt, yes, you can message me in a WhatsApp. We can discuss. Don't ask doubts in this time. So because the many students are complaining about the flow of discussion is affecting. Yes, if you are unable to understood, I think you can see my number in the scrolling. Okay, you can contact with me for the doubt clarification purpose. So not now, after the live session is over, then you can ask. Okay, don't ask any chapter, previous chapter doubt. Yeah, okay, that is common only. Many person can get the doubts. Okay, yes, ma. So amendments are there, just listen. That is only I am saying, Dheeraj Harichandani. Okay. Now, so I will not see comments. I will off the comments directly. So listen carefully. 5 minutes wasted. Okay. Reason, ma. What is the weightage? Fixed 9 marks we can get from this chapter. And so this is a total chapter is nothing but capital gains linking only. Many students are thinking that, sir, we are getting the questions from capital gain chapter. That's why we need to refer that entire capital gain chapter from CMA Intera. No, not needed. We have to refer this chapter. So this is a definitely total chapter related to that what chapter? Ma? Capital gain chapter. Okay, capital gain chapter only. That's why. Now, so what are the main concepts we have to learn in this chapter? One is an amalgamation. Another one is a demerger. So conversion of sole proprietorship concern into company. Next, what is a treatment conversion of firm into company? Next, conversion of private company or unlisted public company into LLP. Next, slum sale. So these are all are nothing but what called as business reorganizations. What is it? Business reorganization, or we can call it as business restructuring, or we can call it as a business reconstruction. So now, sir, if any organization changed its nature from one form to another form if they changed, like amalgamation is happened, in case of demerger is happened, then what is the tax treatment we have to know. So that is only the main objective of this chapter, not accounting treatment. We have to learn about the tax treatment. Yes, sir. So that you can know tomorrow. That is not related to your preparation, first of all. So that is not at all related to your preparation. Listen carefully. Last concept is depreciation concept and apportionment of depreciation in case of business reorganization. In these 5 cases, so nothing but what 5 cases only, first 5 cases, how we can apportion the depreciation. How we can apportion the depreciation. So this last concept I will discuss in the PGBP chapter because depreciation is a PGBP concept and apportionment of depreciation also in these 5 cases we can discuss in the PGBP. And remember, many times we are getting the questions from the depreciation. Still students are thinking that, sir, intermediate PGBP syllabus is required. Yes, required for doing the second question, that is a total income question. But remember, depreciation exclusively we have in our syllabus. So in which chapter? Business restructuring and reconstruction. That's why in all MQPs, if you are opened, you are getting the questions related to depreciation concept. Okay. Are you clear up to now? Now. So can you tell me what are the business reorganizations? You have to remember these 5 things in an order. Amalgamation, demerger, conversion of sole proprietorship into company, conversion of firm into company, conversion of unlisted public company or private company into LLP. Now, remember, sir, I am expecting for this attempt. So like last attempt also I expecting. So that is a slump sale concept. Still I am expecting every attempt, but they are not given in the last attempt. Now, first we can complete the slump sale. First we can complete the what slump sale. Then after we can go one by one. So now, so I will explain the slump sale concept. Listen carefully. So whatever the points I am highlighting with that, whatever the color, please look at that points only. Don't refer anything. Okay, after that we can do some problems related to slump sale also. I am allocating some 20 minutes only for slump sale. So listen carefully. Yes. Mr. A established one factory, that is in 2005. So can you tell me? He established one factory, that is only one undertaking, or we can call it as one unit. Yes. Can you tell me how many assets are there in that factory, like land, building, plant and machinery, furniture, stock in trade, and intangible assets, some all etc. assets are there in that factory. But so due to financial issues, he wants to sold this factory, but in market he can sold this factory for the 60 lakh. That means what is the fair market value of the factory? 60 lakh. But he's selling only for that how much amount? 50 lakh only. He's selling only for how much amount? 50 lakh. Give me 1 minute time. So now set. So we can capable to sell it for how much amount? 60 lakh, but we are showing that actual consideration as an 50 lakh only. Now, remember, for this fellow, can you tell me, for this Mr. A, this entire unit is an capital asset only. He is selling, that is an transferring. Now we are required to calculate the capital gain. Now we are required to calculate the what capital gain. So can you tell me? So now how we can calculate the capital gain? I will tell you. Here we are selling entire undertaking for lump sum consideration without assigning that values to the individual asset. If you are asking what is the sale price, I will tell you lump sum sale consideration. What is that amount I am receiving for building? What is that amount I am receiving for plant and machinery? What is that amount I am receiving for that intangible assets land? I don't know. For lump sum consideration, I am selling without assigning that values to that individual assets and liabilities. The type of sale only called as what ma? Slump sale. The type of sale only called as what ma? Slump sale. Remember, so now we are required to calculate the capital gain in case of slump sale under which section? Section 50 capital B. Remember, we have to calculate the capital gain on slump sale under which section? Section 50 capital B. Now, remember, what is a capital asset? This entire undertaking is a capital asset. You are selling, that is called as what? Transfer. If capital asset is transferred, we are required to calculate the capital gain, but not normal calculation. Here we have to follow the special provision, that is 50B. What is the meaning of slump sale ma? We are selling entire undertaking, one or more undertaking for lump sum consideration without assigning that values to that individual assets and liabilities. That is only called as slump sale. Now, sir, if you want to calculate the capital gain, first you have to know about what is the nature of capital gain. Here, so based on the period of holding only, we can decide whether here we are required to calculate the long-term capital gain or short-term capital gain. So now, remember, period of holding is more than or equal to 36 months, it is a long-term capital asset. Less than or equal to 36 months, it is a short-term capital asset. So now can you tell me, it is an established long ago in 2005. Now during the previous year 24-25 we are selling. So that's why definitely more than 36 months only. So that's why it is a long-term capital asset. Consequently, we are required to calculate the long-term capital gain. We are consequently required to calculate what? Long-term capital gain. What is the format? Yes. Please take the sale consideration. Okay. What is the sale consideration ma? Sir, here if you are taken that exactly 50 lakh, that is an leads to tax avoidance. That's why they inserted the one specific anti-avoidance rules. Okay, you are selling only for 50 lakh, but what is your capability ma? 60 lakh. That's why whichever is higher you have to take. Fair market value or actual consideration, whichever is higher you have to take. This is only example of what ma? Specific anti-avoidance rule inserted in the section 50B. Yes, now, so maybe many students are expecting this explanation. Simple ma, as per rule 11 UAE, or you can call it as a rule 11 UAE. So this is only called as FMB 1, actual consideration only called as FMB 2. So nothing but whatever that asset we are transferred, undertaking we are transferred, that fair market value, entire undertaking fair market value is nothing but FMB 1. So what we are receiving here, cash we are receiving, that is only what ma? FMB 2. What is that ma? FMB 2. Remember, please reduce the transfer expenses from the sale consideration. Please reduce the transfer expenses from the sale consideration. Example, they are given the 2 lakh. Example, they are given the 2 lakh. Can you tell me net consideration how much you got ma? 58 lakh. Now, here, remember, even though we are calculating the long-term capital gain also in section 50B, there is no indexation. Even though here we are calculating the long-term capital gain also, there is no indexation under section 50B. So that's why cost of acquisition we have to take. Sir, here every asset cost of acquisition computation is extremely difficult. Every asset cost of acquisition computation is extremely difficult. So that's why remember, instead of cost of acquisition we have to take the what man? Net worth. Please type that net worth. So how to calculate the net worth, I will tell you. Listen carefully, how to calculate net worth. Yes, net worth means nothing but you know already. Yes ma, if you are taken the balance sheet in shape, T shape. So here total assets you got, that is an 100. So nothing but outside liabilities you know. like bank loans as well as trade creditors, etc. 60. So nothing but what ma, equity plus reserves is nothing but what ma, 40. Indirectly you can calculate total value of total assets minus what ma, outside liabilities, or you can sum up these are all that inside capital funds, then you can call it as net worth also. Then you can call it as net worth also. Now, can you tell me what is a net worth formula, ma? Total value of total assets minus outside liabilities. Can you tell me total value of total assets minus outside liabilities? Example, debtor, creditors, bank loans, etc. These outside liabilities always you have to take at a book value. Book value means nothing but whatever the value given in the balance sheet, that value only you have to take for the computation of the net worth, for the purpose of computation of net worth. Then, so how we can take the total value of total asset? This is an important, listen carefully. If depreciable assets are there in our balance sheet, yes, asset side, we have to take the opening WDV as per section 43 subsection 1. That means WDV format is there. Opening WDV, cost of additions minus money receivable on sale. Then you will get depreciable value. On that we can calculate the depreciation if you are reducing closing WDV. That means whatever that year starting opening WDV is there, that you have to take. Self-generated goodwill, if anything is there, for that you have to take that value as a nil. And if you have any section 35 AD deduction claimed asset is there in your balance sheet, so that value also you have to take it as 0. Why? Remember, so this value we can't calculate properly, that's why we have to take it as 0. And already we claimed the section 35 AD deduction 100% of that asset cost, that's why now that value of that asset while calculating the slump sale we can take it as a nil. So remaining all the assets like yes, non-depreciable asset, like purchased goodwill. Remember, self-generated goodwill only nil. Purchased goodwill always we have to take at what value, ma? Book value. Now, while calculating the net worth, if any revaluation is done, please ignore the revaluation amounts and you can take the original values only. Remember, these points if you forget, you can't do the problem. So outside liabilities means, can you tell me outside liabilities means debt, yes, or debentures or creditors or banks loan, always you have to take at a book value. Now, total value of total assets, how you can take, if that is a depreciable assets, opening WDV, self-generated goodwill, nil, section 35 days, nil, other assets, we can take it as a book value. Example, other assets, non-depreciable asset, goodwill. Sorry, what goodwill? Purchased goodwill. And while you are taking these are all the amounts, please ignore the revaluation figures. Then you will get net worth. Okay, suppose we got a net worth as an 49 lakh. So just random figures only I am taken for explaining that concept. 49 lakh if you removed, then here you got an what ma? Gross long-term capital gain. Gross long-term capital gain. If any section 54 series exemptions are there, you can reduce ma. Now, in our example, I am not taking the any section 54 series exemption. That's why this is a net long-term capital gain. So, what is a tax liability? How to calculate the tax? Now, I will tell you. For the slump sale capital gain is tax. If that is a long-term capital gain, remember, if that is a long-term capital gain, remember, if transfer is done before 23/7/2024, 20%, if transfer done on or after 23/7/2024, 12.5%, this is an amendment. Previously, we have an only one rate, but now amendment. Yes, I think one person asked, sir, is there any amendment? This is an amendment. Before 23/7/2024, 20%, on or after, yes, exam, definitely they will give you the transfer date. Now I will give you the transfer date, that is on 30th/9/2024 is a transfer date. Now can you tell me what is a long-term capital gain tax rate we have to take, ma? 30th/9/2024 means now we have to take the 12.5. So now please calculate the tax liability. On 9 lakh we have to apply the yes 12.5%. Can you tell me total income of the yes Mr. A? Now 9 lakh only. Many students are taking the sale consideration as an income. No. Total income means nothing but if no other income is there, this is only the total income, 9 lakh. So now you can apply the health and education cess. No need to add the surcharge, because for an individual, can you tell me when we can levy the surcharge if the total income is exceeds 50 lakh? Now just 9 lakh total income only. So that's why not required. And this is only that amount you will get it as a capital gain. Are you clear up to now? So net worth computation, if you remember, ignore. So please ignore the net worth computation now. we can forward to that what ma further discussion. What is that further discussion? Sir, how to calculate the fair market value 1, how to calculate the fair market value 2, I will tell you. Okay, so here you got how much amount? Yes, you can replace ma, no issue. Now I am asking one point ma, listen carefully. No, remember. So normally period of holding changed for all the sections ma, but here section 50B related always we have to check the 36 months only. Remember, rates changed and the period of holding for determining the undertaking as an capital long term or short term, always we have to check 36 months only. Clear ma? From 2005 to 2024-25 we have, that's why more than 36 months long term capital asset. Now FMB1 and FMB2, now we can discuss ma. Sir, rule, can you tell me what is the rule ma? Rule 11 UAE. FMB1 means, I will share this PDF if needed, don't think about it, just listen, no need to write it down also. FMB1 means, what is that asset we are transferred, for that we can calculate the fair market value. Whatever that asset we are transferred, here we are transferring the entire undertaking. Okay, randomly I am given the fair market value of that entire undertaking is 60 lakh. But how we have computed that 60 lakh? That we know. Yes, remember, A plus, yes, I think in version 4 minus is there ma, listen carefully. A plus, B plus, C plus, D minus L. That means these are all our assets and minus liabilities. Then we can get the fair market value of our undertaking. Now, sir, what is the speciality? Listen carefully. It is a very easy concept ma. Okay, first, if in our balance sheet, if immovable property is there, so for calculating the fair market value, please take stamp duty value, it is over. Sir, in our balance sheet asset side, if we have shares and securities, for the purpose of calculating the fair market value, please take fair market value. Definitely they will give you in exam. And if any jewelry, artistic work is there in your balance sheet asset side, yes, remember, for that also you can take the fair market value or open market value. Remaining assets, can you tell me what are the remaining assets ma? So anything like cash, stock, etc. Any asset other than other than B, C, D, what is that value we have to take ma? Book value. What is that value we have to take ma? Any asset other than B or C or D, what value we have to take ma? Book value. After calculating that, yes, please reduce that amount with the net income tax paid, and if any unamortized amounts are there, please reduce, then you can take that as an A amount. Then, sir, fair market value, yes, remaining assets ma. For remaining asset, what value we are taken ma? Book value. Now, sir, assets itself considered as a fair market value of entity? No, liabilities. What liabilities we have to take? Outside liabilities only. Sir, outside liabilities value, what value you have to take, sir? Simply they are given what value ma? Book value. BV means what value ma? Book value. Sir, this is an easy problem. Definitely they will give you in an exam ma. Here also book value. Then you will get the what ma? Fair market value of our undertaking. This is only we are transferring. Now, sir, fair market value 2, that is only simply we can call it as an actual consideration. This is only we can call it as an actual consideration. That is, what is a consideration we received? Sir, in our example, we received cash, that's okay. But sometimes they can give some amount in cash, some diamonds they are given, some immovable property they are given as a consideration. Now, how to calculate ma? E plus F plus G plus H. These are all the things we are received. For that we are calculating the fair market value. If cash received, cash value only you can take. If non-monetary assets, if you are received, fair market value. If fair market value not available certain assets, then you can take open market value. If you are receiving any immovable property, you can take the stamp duty value. So in this ways only we can receive the consideration ma. Sir, suppose if you are receiving cash value only actual consideration. So they are given the cash along with the diamonds they are given. Okay, fair market value may be not available. That's why you can go for the open market value. Then altogether we can call it as a fair market value 2. So please compare the fair market value 1 or fair market value 2. Then you will get the what ma, whichever is higher only we can take it as a sale consideration. Sir, why you are stressing out this concept in this level? Reason I will tell you. Sir, net worth computation, you have to take the different values for different assets. Ignore this. Remember, for while doing the net worth, you have to open this theory. While you are doing that FMV1, you have to open this one. While you are doing that FMV2, you have to open this. Remember? Now, we can discuss the one problem from the workbook. That is only the last question I will discuss. Ma. Last question I will discuss. Shall we start, ma? So, slum sale related one question is there. Last question means slum sale last question. I think question number 14. Yes. Shall we start question number 14? All of you please give me confirmation. If you are saying okay, then we can start the question number 14. Quickly we can close the question number 14. After that we can go for the further problems in slum sale. Please give me confirmation, ma. Now, Sriram Enterprises proprietorship having the 2 units. So now what are the units, ma? Unit 1 and unit 2. Now unit 1 is transferred on 1/4/2024. That means it isn't transferred before 23/7/2024. That you have to remember. Dishita, sir, this much of depth is not there in CMA final study material. Agree, ma? But in our recently released workbook, they are showing the consideration with the FMV1 value, FMV2 value. That's why I'm included these things. Okay, definitely they will give you. Okay, and in amendments material they are released. Na? In amendments material they are given the FMV1 and FMV2 computations also. Okay. So whatever that income tax we paid or amortization means nothing but these are like our assets, like liabilities related only. That's why we are removing from the assets. So these two, net income tax paid as well as amortization means like these are the liabilities related only. That's why we are excluding, that is an obligation we have to incur or already incurred. So that's why we want to remove it from the assets. That's why we are reducing it from the A point. Now, what is a consideration, ma? 14 lakh. So you are selling for the total consideration 14 lakh. This is an actual consideration or we can call it as a fair market value 2 also. Unit is started in 2005-6. Now can you tell me that unit 1 is a long-term capital asset? On that we can calculate the long-term capital gain. On that we can calculate the what? Long-term capital gain. Now, so expenses are there. These are the transfer expenses. We can reduce it from the net gross consideration. So okay. Next, some assets and liabilities they are given. Now we can discuss one by one. revaluation reserve is created by revising upward value of the land of an unit 1. Can you tell me? Here, unit 1 land is upwarded. By using these upward only, they created the revaluation reserve. That means if I am ignoring the revaluation reserve, what is that original value? 8 lakh. So because the revaluation reserve created 5 lakh means how much they are increased? 5 lakh. That means without revaluation, that value is 8 lakh. While calculating the net worth, the revaluation figures we have to ignore. Next. Sir, that asset stamp duty value they are given. Okay, we can check it out. Why they are given the stamp duty value? On the date of slump sale only they are given the value. Next. Sir, what is this point? This is only the slump sale definition. No individual asset value they are given in the transfer deed. Patents are acquired in 1/7/2022. Yes, this is an acquired on 1/7/2022. Patents is a depreciable capital asset, but they are not given the depreciation. That means nothing but this 2,50,000 value related to unit 1 is correct or incorrect? Incorrect. Now, machinery represents the written down value only as per Income Tax Act 1961. Whatever the machinery value is there, that is only the WDV only given in the balance sheet. Now, they are asking capital gain. Can you tell me here? We are required to calculate the capital gain by using section 50B, that is in slump sale. Long-term capital gain we have to calculate. So now, first of all, we have to give the heading computation of capital gain on slump sale of unit 1. Yes, sale consideration we have to take. We have to take that what? FMV1 or FMV2, whichever is higher. FMV1 means nothing but what is that our fair market value of our undertaking. FMV2 means what is that consideration fair market value we are received. FMV2 we can call it as an actual consideration also. Now, shall we calculate that FMV1 and FMV2? Yes. FMV1 and FMV2 we can calculate. Now, fair market value 1 they are going to calculate. So what is that? Open that fair market value 1 format. Okay, A plus B plus C plus D minus L. Okay, minus L. Now, can you tell me what are the assets they have? They haven't any immovable property? Yes. Can you tell me they haven't any immovable property? Yes. What is that point? A plus B plus C plus D minus L. Can you tell me, first of all, they haven't any land? Yes. In question you can check land is there. For that land, which value we have to take? Stamp duty value. They are given that stamp duty value in that information as an 10 lakh. So now you can take that as an 10 lakh. You can take that amount as an what? 10 lakh. Now, next, is there any shares and securities are given? No. Is there any jewelry artistic work given? No. The remaining all we have to take what values? Book values. So nothing but they are not given any jewelry related, shares and securities also not given. The remaining all assets value we have to take book value. So can you tell me what is that book value here? Yes, ma'am. What is that book value of the assets we have? Please check, ma'am. 4 lakh, 2 lakh, 2 lakh 50,000. Remember, 4 lakh, 2 lakh, 2 lakh 50,000. So that is only the total we are doing. 4 lakh, 2 lakh plus 2 lakh 50,000. How much amount we got, ma'am? Yes, totally if you are solving assets value you got. Then what about liabilities? Liabilities means what are the liabilities we have to take? Outside liabilities of unit 1 only. Yes, outside liabilities means, can you tell me? Yes, bank loan. Can you tell me how much for unit 1? 70%. And the trade creditors related, yes, how much we have? 25%. Please calculate the outside liabilities for unit 1 proportion only and sum together, then you will get 3,67,000. Sir, nothing but L means outside liabilities. Please solve these things. Then you will get 14,82,500. Sir, remember these things and you can check the balance sheet. Yes, immovable property, stamp duty value you have to take. So that's why stamp duty value. Yes, next jewelry is not there. Shares and securities also not there. Remaining all we have to take the book values. Next, sir, liabilities, outside liabilities, please take. What is that outside liabilities total? We got 3,67,500. We got fair market value. Fair market value 1 we got. So, can you tell me fair market value 2 here simple ma cash only. Fair market value 2 cash only we received. That's why 14 lakh only FMV2. Whichever is higher ma 14,82,500. If you don't know this provision, you can solve by using that what ma 14 lakh. That's why answer can be wrong. So remember 14,82,500 we got ma. Yes. Next from these, please reduce the transfer expenses. Remember Vaishnavi. Yes. While calculating the FMV1, yes, remember these three other than any asset is there, we have to take book value. What is that? Patent's book value is there 2,50,000. That only we considered. Remember, book value we have to take. Whatever they are recorded, that value you need to take. Remember. Next. So minus 36,000 transfer expenses if you remove, then you will get net sale consideration. From that we have to reduce net worth. Now for calculating the net worth we have to take the different figures. Vaishnavi, we have to take net worth computation. In that we can reduce the patents is depreciable. That's why we can take the depreciable opening WDV. Now shall we calculate net worth ma? Yes, net worth means nothing but what ma? Total value of total assets minus outside liabilities. Total value of total assets minus outside liabilities. Now, can you tell me, already you know outside liabilities. Liabilities are always taken at what value ma? Book value. Unit 1 outside liabilities you know already. Then total value of total assets we can take. Can you tell me here what is the value we have to take ma? Remember, machinery WDV we have to take. Already they are given the WDV only. Next one ma, patents we have to take WDV, but this is not WDV. 2,50,000 is given, but this is purchased in the year 1/7/2022. They are not taken the depreciation. This value is not a WDV value. Now, how we can calculate the WDV value ma? So 2,50,000 is a patent purchased in the year 22-23. So please give the 25% depreciation. Then this is a closing WDV. Again next year you can give the depreciation. This is only the opening WDV for that yes ma slump sale done here. So that is only the value we have to take. Opening WDV. Machinery value already given ma. What is that machinery value given? 4 lakh. That is also what ma? WDV. Next sir, remaining assets we have to take it as an what ma? Book values. That means revaluation figures we have to ignore. Can you tell me revaluation figure ignored, then book value is what ma? 8 lakh. Debtors book value you have to take. Debtors book value you have to take. This is revaluation ignored amount and debtors 2 lakh. So total value of total assets minus outside liabilities if you are taken, you will get 11,73,125. So this is only the confusion for the students. While you are calculating FMB1, please consider only the fair market value 1 theory. What is that values we have to take? And while computing FMB2, please consider that. And if it is over, while calculating the net worth computation, you have to take this theory definitely. Are you clear ma up to now? Now please substitute that amount of a net worth what you got here, and if you are reducing that, you will get the long term capital gain. You will get how much ma? Long term capital gain. In the same way, you have to do the one question from the recently released ICMAI workbook. Yes, recently released ICMA workbook. You have to solve question number S3. Slum sale question they are given. So I think in this chapter they are given the 3 questions. One question is related to slum sale. You have to do this on your own. Definitely, while doing that, yes, definitely, while doing that, FMB1 theory you have to remember, FMB2 theory you have to remember, then how to calculate net worth, yes, then it's over. But this problem is little bit easy, that's why I am taking the what ma. So this problem is little bit easy, that's why I am taking that one question from workbook only, then you can do these things on your own also. And our solution is also there, the solution is correct only. Now, sir, then what about the remaining 2 questions, sir? These are the questions are related to depreciation. We can discuss these questions and these are already we have in our workbook also, PCBP chapter. In PCBP chapter already we have these questions in our workbook, but while doing the PCBP chapter we can discuss these questions. PCBP depreciation we are included in the PCBP chapter, but in study material we have a depreciation and apportionment of depreciation in the business restructuring chapter. Don't ignore the depreciation concept. Are you clear? Now I want to shift 1 or 2 minutes discussion for the tax planning chapter. Remember, I want to discuss something for the tax planning chapter. Okay. Sir, remember illustration 1, lease or buy. Illustration 2, yes, already we know this is an tax planning in the area of capital structure. This question we are already discussed in yesterday's session. Next, again they are asking the lease or buy. Again they are asking the make or buy decision. Make or buy decision. So last question is case study question. They are given the different cases. We have to decide whether it is in tax planning, tax management, tax evasion or tax avoidance. So that means in this attempt definitely we can go take questions from the lease or buy decision. Do you know one thing? They are given the in MQP also lease or buy only. So that's why please try to do this at least one problem. So nothing but what my cost of lease you can calculate by using PVAF factor as well as cost of buy also, whichever is lower that is only we can take. So it is similar to your SFM leasing decision questions only, but we can get these questions also in our tax exam, don't forget. So this is only that information I want to share with you. Yesterday that is a pre-recorded session I uploaded, that's why I am unable to talk on that session. That's why now please do these questions also from the workbook. These questions are already in our study material but not in my material. In workbook if I am included I have to tell these also, that's why I am not included, but you have to solve this question also. Now shifted to discussion, shifted to our discussion slum sale. So just give me confirmation about are you understood the concept of the rules FMB1 how we are computed, FMB2 how we are going to compute it. Are you clear ma up to now? If you are getting the clarity then I will go with some more problems, then after we can go for the other concepts ma. Yes, I am expecting a reply. Yes ma, while calculating FMB1 and FMB2 as well as net worth computation, many students are doing the mistake. Even in exam also we can do. That's why don't do that silly mistakes. Remember and do the practice at least once. What are the values we can take for FMB1? What are the values we can take for FMB2? And what is that? What is the procedure we can take for that net worth computation? Now I want to tell you the remaining questions from the slum sale in our material. Based on the past examinations, question number 8 slum sale only, question number 9 slum sale only, question number 10 also slum sale, question number 11 also slum sale, Question number 12 also slump sale. Question number 13 is slump sale versus merger, demerger. I will tell you last of the session, ma. Remember, sir, in these previous questions, no need to calculate the FMV1, FMV2. What is the reason? Because they are not given the sufficient information for FMV1 computation. So that's why this value only we can take it as an what ma? This is an FMV2, or we can take it as an actual consideration. Remember, so they are not given the sufficient information for that FMV1 computation. Yes, you can listen again, ma. No, I want to cover that few more things. Try to understood, okay? Okay, if you are asking, that's why I can do this question. Yes, I can do this question. So they are not given the sufficient information for FMV1 computation is not possible if they are not given information. So that's why FMB2 is not possible. Whatever that consideration they are given as an actual consideration, with that only we have to do the problem. Okay. Question number 10 is nothing but given in the last 2 attempts back, ma. Remember. Remember, if they are given that information properly, like all details, we have to calculate FMV1. So in this question, they are not given sufficient information for computing FMV1. That's why whatever that sale consideration is given, that is only we can take it as a consideration for doing the problem. Now remember, ma. So what is that unit they are selling, ma? This company having the 2 units. Yes, one is on what, ma? Product X, and another one is on product Y. So what is that unit they are totally selling as an going concern to others, ma? Unit Y. As an slump sale. What is the consideration we are receiving? So this is only FMB2 we can call cash only. That's why it is only actual consideration. Now, balance sheet they are given. What is that unit we are transferring, ma? Y. That's why I highlight these assets of Y unit. Assets of Y unit and liabilities of Y unit also. So this product Y is from the 2017. What is that? 2017. That's why it is a long-term capital asset. Then we can calculate the long-term capital gain. Now, fixed assets, sir, that all the questions after session you can ask them, like where we need to study the material. All the things you can ask after session also. Listen. Fixed assets of product Y. That means what, ma? In these fixed assets of product Y includes land which is purchased at 40 lakh in the year 2008 and that is revalued at 60 lakh on this day. Now I will tell you. Out of this 200, can you tell me what is that, ma? 60 lakh is related to what, ma? Land with a revaluation. But without a revaluation, what is that value, ma? 40 lakh. Can you tell me? Without a revaluation only we have to take for computing net worth. So then after this fixed asset, what is that balance is there, ma? 140 lakh. What is the balance is there? 140 lakh. So that is only they are given. The mirror that balance assets, that is 200 minus 60 lakh, 140 lakh, it is an written down value of the depreciable asset. These are all our depreciable asset. That is only the WDV they are given. As per section 43(6) of an Income Tax Act 1961. They are asking calculate the tax liability. Okay, first sale consideration. How much, ma? 385 lakh. Is there any amount of transfer expenses mentioned? No. Minus we have to take the net worth. No need to take the indexation, directly net worth. So now we can calculate the net worth, ma. Total value of total assets minus outside liabilities. So assets, so 40 lakh we have to take, not 60 lakh, 40 lakh, and the written down value of an depreciable asset 140 lakh, and remaining assets book value we have to take. Please do the total of assets, ma. Please do the total of assets, ma, calculator, and you can compute 40 lakh plus 140 lakh plus 110 lakh plus 35 lakh. 325 lakh is a total value of total assets. Sorry. 60 plus 40 plus 140 plus 110 plus 35. 325. Yes, please check it out, man. I got 325. Total value of total assets. Where I done the mistake? Okay, so I got 325. Outside liabilities, how much, ma? Total value of total assets minus outside liabilities. Can you tell me how much, ma? 90. Yes, can you tell me what, ma? Outside liabilities, I think 90. So can you tell me total value of total assets minus outside liabilities, that is 325 minus 90. Yes. Sorry. Written down value as per Income Tax Act. Sorry, ma. Written down value as per Income Tax Act, they are saying 90 lakh. This is only the value I have to take. WDV as per Income Tax Act. Sorry, ma. So now we can take that values. We have to take the WDV as per Income Tax Act 1961. Now you will get, ma. Sorry. 40 lakh plus 90 lakh plus 110 plus 35. You will get a 275. Yes, here 90. 275 minus 90, you will get that what, ma? 185 lakh is net worth. So please remove the net worth from the sale consideration. You will get the long term capital gain. Yes, ma? Long term capital gain. Yes, correct only. What is that mistake I done? So here, that is not a WDV. WDV as per Income Tax Act 1961 is 90 lakh. That value I have to take. Long term capital gain, I got what, ma? 200 lakh. Remember, that is in 2 crores. We can call it as in 2 crores also. Why? Here, transfer date is 31st March 2000. Yes, ma? 25. That means on or after. On or after. What date, ma? 31st March, 23/7/2024. That's why what is the rate? 12.5. Please apply 12.5, but here you have to apply surcharge because total income is more than exactly 2 crore. What is that rate we have to apply, ma? 7% here. Company. This is a company 1 crore to 10 crore for domestic company 7%, and health and education cess is 4% you have to apply. Are you clear up to now? So don't ask any other slum sale question. You have to do on your own. So don't ask any extra slum sale questions. You have to do this all the things on your own. You have to pick one pen and paper and you can do. Then only you can do in exam. Okay. But you learn that concept. That's enough. Ignore. And in your free time you can do the practice one. Next I want to go with the one more concept in this chapter. What is a concept I want to start? Conversion of sole proprietorship concern into company. Shall I start the next concept? Conversion of sole proprietorship into company. Slum sale, every person needs to do the sums relating to FMB1, FMB2 also. Otherwise, anyone can do the remaining questions, but you have to do slum sale questions. Definitely FMV1 and FMV2 things you have to do. That is given in amendment material as well as workbook also. Highly they can ask me. So now, conversion of sole proprietorship concern converted into what? A company. Now, easy concept, listen. And one more, just a small point I want to tell you. Sir, in this slum sale, we are transferring the stock in trade now. For this, we need to calculate PCBP income? No. Remember? What is that thing, ma? Remember, sold, if in case of slum sale, in case of what, ma? Slum sale, no need to calculate the PCBP income even though you are transferring the stock, because there is no value they are given individually for the stock in trade. Entire value only they are given. Entire value only they are given. They are not given the, what is that value, ma? Lump sum amount. Sir Jack, do you know marginal relief concept first? Marginal relief concept is if amount is more than just 1 lakh or 2 lakh over basic limits. Here that is a domestic company. So domestic company basic limit is 1 crore 10 crore. How you can get the marginal relief in the last question? Total income 2 crore. That is a long term capital gain 2 crore. How you get the marginal relief regarding that? Now, yes sir, if you want to convert the sole proprietorship concern into company, yes you can do. Example I will tell you. Yes, Anil sole proprietorship form is there. So they are doing the business in the form of sole proprietorship form, but on this day during the previous year 24-25 they want to convert into it as an private limited company. Yes, they can do. Now, remember here, what is that point, ma? Anil sole proprietorship needs to transfer that all the assets and the liabilities to the company on the date of transfer immediately. Definitely they need to transfer that all the assets and liabilities to that what, ma? Company. Simply style of doing the business and the legal form only changed here. Now, if the following of 3 conditions are satisfied, we are given the one benefit to the whom sole proprietor or transferor or predecessor. What is the benefit? Sir, you are transferring the capital asset, but no need to calculate the capital gain because it is an excluded from the transfer. Yes, who said that? Yes, section 47 subsection 47 subsection 14 saying that if these are all the conditions are satisfied, that is not treated as transfer and no need to calculate capital gain. This is a huge relaxation for the sole proprietorship firms who want to convert into the company. Now, first all the assets and liabilities are transferred. Second one, proprietor needs to hold at least 50% of voting power of the company and the lock-in period, what is it, 5 years from the date of conversion. From this date of conversion, sole proprietor needs to hold at least 50% of voting power for 5 years. And here, sole proprietor can receive the only shares as a consideration from this company, no other consideration. So only what, ma? He needs to receive the only shares as a consideration. Other than that, no need to receive anything. If all these 3 conditions are satisfied, capital gain no need to pay. Simply capital gain exemption. Example, if this fellow calculated the capital gain, 8 lakh will came down. So just calculate 8 lakh will come. But now no need to pay this 8 lakh tax. So capital gain related tax if calculated, can you tell me how much? Example I will tell you. Capital gain is 10 lakh. On that tax is nothing but 20%, exactly 2 lakh. So can you tell me, these are all the things are exempted only in the hands of this predecessor if these conditions are satisfied. Now, sir, if stock transferred, yes, at a profits to the successor, then it will be treated as business income. All assets, capital assets related only, we are calculating capital gain. If you are transfer the stock value 1 lakh, we are transferring it to the, yes ma, company for 1,20,000. Can you tell me what is the profit transferred to the successor as a stock ma? So what is the stock value we are transferred? 1,20,000. In our books, 1 lakh only the value is there. That's why profit is 20,000 with respect to the stock. It will be taxable under the head PCBP. Capital gain exemption is there, but not for PCBP. Remember? Are you clear, ma? Okay, we can do some extra activities also after completion of one more concept. What is the section you have to remember? Section 47, subsection 14. Now, next concept we have to start. Conversion of partnership form into company. Yes, you can change your legal form of that business from the partnership form to company. Now, please let me know what is the section, ma? 47 subsection 13. 47 subsection 13. But it is only the first one. Next 14 is nothing but SOP into what, ma? Company. Remember, Anil sole proprietorship form is there. Sorry, Anil company is there. Sorry, Anil and Co partnership form is there. That is converted into private limited. On which date, ma? During the previous year 24-25 on one day, that is 31st-1-2024. Here also same thing. If the following, how many conditions, ma? 4 conditions are satisfied. Whatever that capital assets are transferred by the, yes, partnership firm, that is not treated as transfer. No need to calculate capital gain also. So because the transfer exclusions are mentioned in the 47 subsection 13. Now what are the conditions, ma? First condition, all the assets and liabilities of the partnership firm needs to become the assets and liabilities of the company immediately on the date of transfer. Second one, whoever the partners are there in the partnership firm, all the partners needs to become the shareholders of a company. And in which proportion, ma? Example, partners are in that, yes ma, 1:1:1:1, like 4 partners are there, all are equal. 25% of capital contribution are done. Equal means nothing but 25% each. 4 members are there as an partners. So in that ratio only they need to continue as an what, ma? Shareholders in that company. So same proportion of which ratio, ma? Capital account ratio. They need to shift it to the company as in shareholders. Next, sir, all the shareholders aggregated together, they need to hold at least how much percentage from the company as in shareholding or voting power, ma? 50%. So that 50% needs to lock for how many years from the date of conversion, ma? Here also 5 years they need to hold the 50%. Okay, if they are not, okay, nothing but at the time of transfer or at the time of conversion, only we need to receive the shares from the company. Other than the share, no receipt of any other consideration. If these are all the conditions are satisfied, okay, so whatever that capital gain we got, 10 lakh capital gain amount, on the tax suppose 2 lakh. So this is a completely what, ma? Exempt. In which year we are taken that exempt, ma? In the previous year 24-25 we are taken this amount as an exemption. Now, so I will tell you one twist here. Who are taking the exemption, ma? Predecessor is taking the exemption. But they are saying promise. Sir, in future 5 years also we will satisfy this condition. What is that condition? In future, not present. Here also one future condition is there. 5 years we will maintain the at least 50% of the voting power. So, but what happened, ma? In future if they are not satisfied? That is only I will tell you. Already whatever that exemption you got in the Yes, can you tell me which section ma? 47 subsection 14, 47 subsection 13. Can you tell me what are these exemption section numbers ma? Please let me know. First one, 47:14 is SOP to company. Yes, 47:13 is firm to company. So how many condition if satisfied ma? Here 3 condition, here 4 condition. What happened ma? In the hands of predecessor. In the hands of whom ma? Predecessor. No capital gain tax is there. I think you know how much capital gain tax is exempted ma? Sir, I want to know one information all in one guru. How you got that information? I think so they are asking for that marathon session in Coimbatore for 2 days. I'm given my consent also, but both the sides we are not at all announced. But how you know about that information, I don't know. So okay, I'm going to take that sessions 2 days in Coimbatore face to face from ICMA branch only. But both the sides we are not announced. But how you know about that information, I want to know. Okay, I don't know whether they are announced or not also. I will try to take the 2 days session face to face marathon in Coimbatore. I think mostly on Saturday and Sunday. On the Saturday and Sunday I will take. Now I am in Hyderabad only. Okay, if they are announced, na, please share that also. Okay, Porna is okay. How you know? I don't know. Okay, no problem. Next, sir, here what is a capital gain amount? 10 lakh. This is an exempt. What is a tax we are not paid with respect to this month? 2 lakh in the year. But remember, in next year, if any one of the conditions are violated, okay, if any one of the condition is violated, can you tell me what we can do, ma? They are already taken exemption, they are dissolved also, but how we can tax, ma? So that's why whatever that exemption they are taken earlier, now that is taxable in the hands of successor. Earlier exemption whatever taken in the hands of predecessor, now that amount is taxable in the hands of successor. In both the cases, who is a successor? Company. This is only twist here. If you are satisfied all the condition, take exemption. In future also you have to satisfy. In future also you have to satisfy. In future if you are violated, then entire amount of an earlier exemption, now that is taxable in the hands of successor. Are you clear? Now, one more thing is there. Sole proprietorship form as well as partnership form is converted into company. Both the cases are covered here. If all the conditions are satisfied, we can set off and carry forward of losses. Can you tell me? Of an predecessor with the whom successor. Predecessor with the what ma? Successor. Can you tell me? Now, already we have a business loss 8 lakh or unabsorbed depreciation 5 lakh. But now these are all the things are closed. Whatever that amount now in that year 24-25, yes sir, now in the 24-25 we can set off. If any excess is there, they can do carry forward also. For how many years? Fresh period of 8 years, because so predecessor is closed. Now we can consider it as a fresh loss, and for this business loss we can carry forward for that 8 years. Unabsorbed depreciation we can carry forward for the unlimited period. Unlimited period. Now remember, business loss, unabsorbed depreciation shall be treated as deemed income in the hands of the company in which the conditions are violated. Example, now we are enjoyed that how much amount of loss set off in this year? 8 lakh we are set off, and 5 lakh unabsorbed depreciation also set off, because the conditions are satisfied. The set off is happened in the previous year 24-25. But in the future, yes, if these conditions are violated like 25-26 previous year, what we need to do ma? Who are taken the benefit? of set of company. Now company that is treated as what ma? Deemed income. So now previously you are doing the setup of these losses and your total income is reduced. Now you have to increase the total income by using the deeming provision. That is, you can create it as a deemed income. Are you clear up to now? So these two provisions are very important. Many students are thinking about these are the different concepts. Same concept, but you have to remember the conditions. If you remember the condition, you can remember for long time. Yes, conditions also same. So these three conditions are copied and pasted, but here only one condition is extra inserted. Shareholders needs to hold their share capital in the company as in that capital ratio of an partnership firm. So just give me confirmation about understanding about these two concepts first of all. Two things you should remember, ma. Whenever this conversion is happened, if conditions are satisfied, predecessor got the exemption. Now, if predecessor is not satisfied, yes, ma. If predecessor is not satisfied, conditions later, whatever that exemption they got, that is now taxable in the hands of successor. And what is that? What is that point relating to set off of losses? Whatever the losses are there in the hands of predecessor, we can do set off and carry forward in the hands of successor. Okay, but if that in future, if the conditions are not satisfied, we can create the provision of deemed income. We can create the provisions of deemed income. Now, remember, next one more conversion is there. Conversion of unlisted public company or private company into LLP. Sir, listed company cannot convert. Unlisted public company or private company can convert. So now here also same. Anil Private Limited is there. Now that is converted in this year on this date to that LLP. Yes, you can do this conversion. But if all the following conditions are satisfied, what are the following conditions? How many conditions? Here you have to remember the more conditions. How many conditions are there given? Up to G. If all the conditions are satisfied, yes, all the conditions are satisfied, that is not treated as transfer. That is not treated as transfer. Why? Because that is transfer exceptions 47 subsection 13b. Section 47 subsection 13b. Now, what are the conditions? First condition is same. All the assets and liabilities of this company, company needs to transfer to what? LLP. Next, all the company shareholders must become as an partners in that LLP. So they need to receive the only share from the LLP. Other than that share, no need to receive extra amounts. No need to receive that what? Extra amounts. Can you tell me? The shareholders needs to hold that what is the percentage of profit sharing ratio in that LLP? 50%. Now remember, lock-in period how many years? Same, 5 years. Next one, total value of assets in the books of accounts of the company in the last 3 years before that year of transfer should not exceed 5 crore. Remember, all the years book value of the assets, please check. Total assets value in their books of accounts of the company, please check. So, does not exceed the 5 crore in every year. So, then this condition also satisfied. Next, they are given, I think if company is converted, that means exclusively private company, converted into what? LLP, their accumulated profits, definitely reserves and surplus needs to be transferred to whom? LLP. So they are restricting the reserves and surplus distribution. Here, private company A and B, C are partners, shareholders. Now they are partners in LLP. So there is a restriction to share the reserves and surplus in company. Now they are converted it as an what? They are converted it into the what? LLP. Now they are thinking as an there is no restriction, but they are putting a restriction. This reserves and surplus distribution, yes, how many years they are restricted? 3 years restricted. So no amount paid from the reserves and surplus to the partners for period of 3 years from the date of conversion, not from year of conversion. From the date of conversion, 3 years, you can't share the reserves and surplus amount to the any partner. Next, remember, last 3 years to the date of conversion, total gross receipts and turnover does not exceed 60 lakh. These are all our MCQs points only. Assets values last 3 years, every year should not exceed 5 crore. And 3 years we can't distribute the reserves and surplus or accumulated profits. And last 3 years total turnover or gross receipt should not exceed 60 lakh. If all the conditions are satisfied, can you tell me? Yes, in that previous year 24-25 we got a capital gain exemption 10 lakh. So what are the tax is not paid? 2 lakh. Now in this year that happened. In future, if the conditions are violated, so already this is closed. This is closed in this year. In the next year, whatever they have taken as an exemption, that is now taxable in the hands of whom? Successor. Already same we discussed. Earlier exemption of capital gain, now taxable in the hands of successor if they are violated the conditions in the next year. What are the conditions? Up to A to G conditions, if they are violated in the later years, now that is taxable. Whatever that amount is exempted here, now that is taxable in the hands of LLP. Now, next point is also same. We know in the previous year, 24-25, we have a business loss 5 lakh, unabsorbed depreciation 2 lakh. Now, if the conditions are satisfied, we can set off in the hands of whom? LLP, that is a successor. Okay, they are doing the set off or some amount they are doing the carry forward also. But remember, how many years we can carry forward? This company is closed. Now that is treated as fresh loss and they can carry forward for 8 years. Unabsorbed depreciation can be carried forward for that how many years? Unlimited years. Now, remember, business loss, unabsorbed depreciation, you are doing the set off directly. Yes, 7 lakh you are doing set off. Suppose. In future, if the conditions are violated, now this total 7 lakh we can treat as an what? Deemed income in the year of violation of conditions. In the year of violation of conditions. Now I will tell you. In our study mate, in our workbook, especially workbook, we have questions also related to this. These are not difficult one. First of all, if you know this concept, that questions are easy. If you don't know that concept, definitely this questions are always what difficult only. Now I will show you what are the questions we have for this each and every concept. I will tell you. Give me 1 minute time. I will tell you. Yes, this is a question related to sole partnership firm converted into company. There is a question related to partnership firm converted into company. Yes, next, so I will show you some answers also, but listen first. Okay. This is a question related to same partnership firm converted into company. Okay. Next, this is a question company converted into LLP. Company converted into LLP. The same things are capital gain only. What is that question? Always in these questions we have to do capital gain. Now I will show you just one thing, main thing in that questions. Now, main thing, same format. All questions you have to do the same format only. Just remember. ABC partnership firm converted into a company on this day. What is that year? Previous year 1920. Okay. On that balance sheet date, they are given the values. Okay. So can you tell me it is a predecessor, it is a successor? So can you tell me in this year, they are taken the capital gain exemption. Now, sir, these are the assets they have. These assets are agreed to take at this value upon the conversion. Okay, in which year that happened? 1920 only. Home fulfilled all the conditions also under 13. So 47 subsection 13. Partners accounts are settled by way of issuing the equity shares in capital ratio super. But can you tell me in this year 1/4/2024, that is in previous year 24/25, all partners transfer the shares. I think lock-in period 5 years is there, but that is not satisfied. In that earlier year, who taken that capital gain exemption partnership form, now that same amount is taxable in the hands of whom? Company. So now we are calculating the capital gain in the hands of whom? Company. In the hands of whom? Company. Capital gain. So many students are confusing. This is a capital asset. This is a capital asset. These are all or not capital assets. Now for these two only I need to calculate capital gain in this year. That same amount now taxable in the hands of what? Successor. Are you clear? This is only the capital asset. We are required to calculate the capital gain for these two assets only. But machinery is an depreciable capital asset. We have to follow section 50. And investments is a non-depreciable. We have to follow section 48. Yes, 48. So these, if you don't know these things, you can't do the problem. Remaining problems also, the same sections you have to use. Remember. What is that point, ma? No, for sole proprietor only that point is given, ma. Don't think about it. Otherwise, yes, always if that stock is sold for that more value, definitely we have to create that what, ma? Yes, here partnership form is sold. That's why we created that what, ma? Any person also, like sole proprietor to company, firm to company, company to LLP, stock related always PCBP only. Can you tell me what is the stock value here? 70,000. We are transferred it for how much? 90. Can you tell me what is the profit? 20,000. In everything also, capital gain only exempted. PCBP that is taxable only if you are transferring the stock at a profit. For any case also, that is the same point is applicable. Now, yes, ma'am. Section 50 depreciable, that is in format is there. Yes, remember. What is that format? Sale consideration. Yes, section 50 computation format I am saying, ma. 48 you know already. Yes sir, in your intermediate itself, gross sale consideration minus net consideration, minus transfer expenses, you will get net consideration. From that, you can reduce the indexed cost of acquisition, indexed cost of improvement, you will get the what? Gross. After removing the exemption, you will get the net. So that is the same, but 50, what is that? Sale consideration, instead of cost, you have to take opening WDV plus cost of additions. Yes, ma? Cost of additions. Newly, if any asset is added, cost of additions. Now, please remove this. Then you will get the always short-term capital gain or short-term capital loss only. No long-term, because depreciable assets are always marked to market value only. There is no long-term capital gain in this. Always short-term capital gain or short-term capital loss only. Now, please take the machinery value. What is the sale consideration, ma? 1,20,000. So what is that, ma? Opening WDV minus what, ma? Opening WDV or cost of acquisition. They are given the opening WDV. How much, ma? 1 lakh. Please reduce the 1 lakh as an cost. You will get the what, ma? Short term capital gain 20,000. Next, investments, what is the sale value ma? 2,50,000. Transfer expenses are not there, that's why it is a net. So investments are purchased long ago, please check 2004 time. So now we can calculate the indexation, it is an important. Long term, yes, it is transferred before 23/7/2024, long ago only. Now remember, please take the cost of acquisition as an 50,000. Transfer year this one ra. We are calculating the capital gain in this year, that is exempt. But now that is only taxable in which year ma? Assessment year 25/26. So that's why, what is that CII in the year of transfer 1920? 289. 289 divided by, what is the purchase year? 2004/5, that is an 113. That is an 113. Many students are taking the cost inflation indexation factor 363, that is wrong. Only what is the value we have to take ma? 289 divided by 113, because we are required to calculate the capital gain in the year of transfer, that is only exempted. Now that is taxable in the hands of successor. Sir, remaining questions also you have to follow the same thing, because the same concepts always. Capital gain exemption is there. Now conditions are violated, we have to reverse that what ma? Capital gain exemption in the year of violation of conditions in the hands of successor. But here, what is that capital asset? Remaining na, don't touch. Stock related you can write a PCBP. So capital asset, one capital asset is depreciable, another capital asset is what ma? Non-depreciable. Non-depreciable related, what you can follow? Yes, you can follow, that is section 48. But for depreciable, yes, you have to solve the question as for section 50 format. End result, remember, always short-term capital gain or short-term capital loss only. In the same, every question you have to follow the same format. Are you clear? So in PCBP, I will tell you the section 50 capital gain computation format, but try to remember sale consideration minus opening WDV minus opening WDV plus cost of addition. This is only, I have to take it as a cost. Long ago I purchased it, sir, but this value is there now for that block. So what is the sale consideration? Differential only, maybe short-term capital gain or short-term capital loss. Clear ma up to now? And one question I will solve you. So because that is a past exam question, these are all our study material question, but this is a past examination question. I want to solve this one also. Remember, BCC Private Limited converted into LLP. Company converted into LLP on this day. What is the date? Previous year 23/24 conversion happened. At the time of conversion, I think you know all the conditions also satisfied under 47 subsection 13B. Super. Unabsorbed depreciation, unabsorbed business loss is there, that is in 48/25 respectively on the date of conversion. I think you know this company having these losses, now that all the things can be carried forward and set off by the successor. Yes, done. Business profits of LLP in that previous year 23/24, how much ma business profits? 85 lakh. Out of that 85 lakh, company related losses are there, that is a business loss is in 48, unabsorbed depreciation 25. Now can you tell me these two things can be set off? Yes, we can do set off. 48 lakh, 25 lakh also we can set off. What is that amount you will get ma? Calculator. 85 lakh minus 48 minus you will get 25, you will get 12 lakh. So this is a normal provision. Yes, they are doing the set off because all the conditions are what ma? Satisfied. No. In the next year, what is the next year ma? Previous year 24/25. Previous year 24-25. Erstwhile shareholders of the BCC, they aggregated 50%, all they are resigned. In future, all the conditions are not, sorry, one condition is violated in the future next year. What happened, ma? So, whatever the benefit they are taken as a set off, that is on 48 plus 25. What we need to do, ma? 73 lakh now in the hands of LLP, that is an deemed income. So if you know the concept, if they are given the new questions also, you can write it on. Or anything also, I know sufficient profits are available. That's why I'm doing the set off in a different order. To be honest, first we can set off the business losses. Business loss only first we have to set off. First business loss we have to set up, then after unabsorbed depreciation, here sufficient profits are available. If you are setting off anything also, no difference is came. Are you clear, ma, up to now? So this is a question given for 7 marks. If you believe or not believe also, in June 2023 exam, they are given this question for 7 marks. Sir, many students are not remembering the section number. We can't do anything, ma. Section 47 subsection 13 is for partnership form 2. Yes, ma. Company. Section 47 subsection 13b, it is a company to the LLP. Next, section 4714 SOP to the sole proprietorship company, sole proprietorship to the company. Please try to remember the transfer exceptions related section number also. Clear, ma, up to now? Yes, please give me confirmation about understanding of up to now completed concepts, ma. What are the concepts are done till now? Yes, I'm going in a speed manner only. There is a reason, ma, because the 2 more concepts are there. I want to cover that all the concepts. The remaining, if you know something from me also, and you can do on your own the remaining problems, that's why. So these are all the concepts. Yes, what are the concepts are over till now, ma? Only 2 concepts are pending. One is an amalgamation, another one demerger. So can you do these 2 questions on your self-study basis, Paresh? Can you do these 2 concepts on self-study? Just I'm asking, man. Okay, understood. That's okay. I want to give the amalgamation and demerger concepts as in self-study. Can you do? Who is a first time listener, right? The amalgamation demerger is not clear up to this slide. Tell concepts, sir, we will do problems. No problem. Just a teasing only. I will explain, but you have to concentrate. So first of all, okay, within 1.5 hours, I'm trying to cover these concepts. I know I'm not covering the some detailed problems, but I am trying to explain the concepts along with the main question I am explaining. Based on that main questions, you can perform all remaining also. First of all, if you are perfect in these, then we can start the amalgamation. Then after we can discuss the demerger and we can close this session. And in demerger, I want to solve one question also. Amalgamation questions now you can do. Amalgamation question you can do. I will give you what is that question also. And next, in detailed handwritten notes, I presented that answer also. Amalgamation concept I will explain, and I will give you that one question from my workbook, and that answer also detailedly I am presenting in that handwritten notes, you can refer. Demerger I will explain in and out concept, and I will do one question also. Okay, remember. First we can start with the amalgamation concept. And many students are thinking that these are the concepts are taken from the parallel universe, and many students are thinking that these are the difficult concept. Nothing. If you are listened at least once, these are nothing in front of you. Slum sale, just if you are invested your 10 minutes time for remembering that FMV1 and FMV2 and net worth format, it is nothing. Like that, amalgamation and demerger also very simple concepts. Listen, I will take extra half an hour also, or extra, that means 30 to 40 minutes also, no problem. You can go and you can watch tomorrow. So, okay. Yes, amalgamation. Now I am starting the amalgamation. Remember. So, whatever that amalgamation definitions you know in our accounting, that is only here. Two companies are closing in order to start the one company. That is an amalgamation. Now, one company is closing and a new company is forming. That is also amalgamation. Merger and amalgamation is one and the same. Now, can you tell me closing company, we can call it as an amalgamating company. New company is called as an amalgamated company. Now, but here one twist is there, and remember the section number also. In Income Tax Act 1961, in case of amalgamation, no need to know about accounting treatment, but we have to know about the what is a tax treatment. What is a tax treatment? Remember, in Income Tax Act 1961, if these two conditions are satisfied, what are the two conditions? I will tell you. These two conditions are satisfied, then only we can call it as an amalgamation under section 2 subsection capital 1B. In exam, they are given the section without mentioning the amalgamation name. They are given the section number. That's why important. What is that, ma? All assets and liabilities of amalgamating company, means closing company, shall become the assets and liabilities of the amalgamated company. Okay, all means 100% assets and 100% liabilities needs to be transferred from the closing company to the new company. Second condition, sir, in this company shareholders are there, na? Shareholders in value, please check. 3/4, that means 75% needs to become the shareholder of what one new company. Then only we can call it as an amalgamation under section 2 subsection 1B under Income Tax Act 1961, not in number, value. So in our life we have 130 members, ma. So out of that 130 numbers, if you are calculated 3/4, that is a different. But now just 5 shareholders having the 75%, if they are shifted also, okay. Value in share capital value, please calculate 75, that much of shareholders are transferred also, okay. Remember, not number, value in shares transferred from the closing company to the new company. Not less than means what, ma? At least. No, please type the two conditions in shortcut, ma. First condition, all assets and liabilities. Second condition, at least 75% of value in shares holding shareholders needs to become the shareholders of an what, ma? B Limited. These two conditions are satisfied. What is the benefit? I will tell you. Now, in case of amalgamation, what is that, ma? In case of amalgamation, if any amalgamation is happened, I want to know the What is that impact of amalgamation on amalgamating company? What is that amalgamating company ma? Closing company. Then what is that impact on the amalgamated company? What is that company ma? New company. So what is the impact on the shareholders? If any amalgamation is happened under section 2 subsection 1b, what is the effect on these are all the persons we have to know, then chapter is over. Yes, this is only the point. What is the tax effect on transferor? This person only, nothing but whom are transferor here. Shall we start our discussion ma one by one? What is the impact of amalgamation or effect of amalgamation on amalgamating company? Now, this is only closing the company. What is that impact? Remember, sir, here closing company is transferring the all the assets and liabilities to the new company. If these two conditions are satisfied, then that is not treated as transfer, no need to pay capital gain. What is the benefit? Why they are given this benefit ma? Sir, if you are not permitted this amalgamation, they will go for liquidation. They will go for liquidation. If company resources are merging with another company, that is only the benefit for the government. That's why government always encouraging the amalgamations ma. If I am not permitted, if I am not given the, yes, this type of tax benefit, they will liquidate and yes, employees also will lose their jobs and we can't collect the corporate taxes. That's why they are already in losses. They want to liquidate, give a chance to amalgamate. So that's why definitely we want to encourage the amalgamation by way of an excluding from the transfer. No need to pay capital gain tax if how many conditions are satisfied? 2. What are the conditions ma? First condition. Sir, here you need to amalgamate with the Indian company ma. If you are amalgamated with a foreign company, there is no benefit to that our Indian economy. That's why if this company is an Indian company, and if that amalgamation satisfies section 2 subsection 1b conditions, what are the 2 subsection 1b conditions? First one, all assets and liabilities needs to transfer, not partly. Second one, 75% of shareholders needs to continue. 75% shareholders in value needs to continue. So I think I written a summary. Summary means this is only the summary, but it is a super summary. Okay, just remember section 2 subsection 1b, amalgamation. When you can call it as an amalgamation under this section ma? Okay, these two conditions, all the assets and liabilities must be transferred. Shareholders in value at least needs to be exchanged with the what ma? New company. Yes, 75% held by the 4 shareholder, 4 needs to transfer ma Jatin, that is correct only. So 75% of the shareholders holding, sorry, 5 shareholders are holding 75%. Then these 5 shareholders are transferred, then only that is called as an amalgamation under section 2 subsection 1b. Now, what is that effect on? What is that effect on amalgamating company? That is a closing company. So no need to pay that what ma capital gain tax. The first condition is amalgamated company is Indian company and section 2 subsection 1b conditions are satisfied. Then no need to pay that what ma capital gain tax. Now we can discuss what is that. So this is only the summary rewritten. One presentation in study material we have another presentation, that is only this one ma. If you want to read, otherwise it is an ignore. So this is entire presentation I am given in the table format. Okay, now next, what is that effect on shareholder? Remember, important, remember. This is the only question you will get. In the same way they will ask you in exam question ma. So that's why listen carefully. If any amalgamation is done, what is that impact on the shareholder? Yes, with your permission I want to start ma. Yes. Now, A Limited is amalgamating company that is amalgamated with the B Limited, section 2 subsection 1B condition satisfied, and it is an Indian company. So then what will happen ma, if these two conditions are satisfied? They will not pay any capital gain tax. Remember, section 2 subsection 1B condition satisfied and Indian company. That means previous discussion only ma. Indian company 2(1)(b) condition satisfied. So that means what ma? No need to pay the capital gain tax by the A Limited. Now, in 2004-5, shareholder purchased the shares in the A Limited with 1,000 rupees. Example important, listen. Now, in 10-11, what happened ma? This company is amalgamated. So, still till 10-11, I am a shareholder in this company. After that, they are allocating the shares in which company ma? B Limited, because this company is closing. So in amalgamation, the shares allocated to that Mr. X by which company ma? B Limited. As of now, I haven't share certificate in the name of A Limited. Now the shares are exchanged with the what ma? B Limited. Remember, in the case of amalgamation, if any shares are allocated to the shareholder, in which year 10-11, that shares treated as exchange here, no need to pay the capital gain tax by the shareholder if the two conditions are satisfied. One condition, you need to receive the only shares, not cash. Second one, that amalgamated company, if that is an Indian company, that means they are giving the benefit to the shareholder also. Previously, for amalgamating company, it is a benefit. Now, it is a benefit to whom? Shareholder also, but conditions important. Only you need to receive the shares from this company. X needs to receive that what ma? Shares. That means we are doing exchange. So this shares is an exchange with this company. No need to receive any other consideration. And this company is an amalgamated company, is an Indian company. Then no need to pay tax. But in future, yes, now we are discussing the treatment in the year of amalgamation. Now, in future, 24-25, I'm selling the shares of B Limited for 3 lakh. Now, I require to calculate the capital gain. I require to calculate the what ma? Capital gain. So now I'm selling the shares of B Limited by shareholder in the 24-25. Now this is 24-25 ma wrongly copied or wrongly taken. 24-25, I require to calculate capital gain. In outside market, you are selling it for the 3 lakh. So now this is an capital assets only. Now transfer. Now I am required to calculate capital gain. For calculating the capital gain, first I need to decide whether it is a long-term capital asset or short-term capital asset. So we need to decide the period of holding. Period of holding. Remember, many students are saying, sir, you got these B Limited shares during this period only, sir. So that's why period of holding is from this date to this date. No ma. Period of holding includes previous asset holding period. Previous asset is A Limited shares. Now present asset is B Limited. Total period of holding we have to take in order to decide one asset is a short-term capital asset or long-term capital asset. That means from old asset you have to take. These are the points you should remember. So here, what is that? Period of holding includes the previous asset holding period. What is the previous asset in my hands? A Limited shares. Now present asset, B Limited. Not only this period, previous asset holding period also. Now cost. Sir, I am getting these things for free, sir, because in amalgamation, they are exchanged my shares of A Limited with the B Limited. I am getting it for free. No. Cost you have to take the previous asset cost. How much ma? 1,000. That is an old asset cost. Sir, this is a long-term capital asset, sir. We decided indexation. While coming to that indexation, you have to take for the new period only. What is the new period? 10-11 to 24-25. 10-11 to 24-25. Sir, in our book, they are given like this, ma. But as per that Manjula Jesa case law, you can take that indexation from the old also. But you have to put up a note point. As per that section theory, they are given that indexation for the only new period. That means from which year they are allocated the shares of a B Limited. But in our problematic questions, maybe you can get the indexation from the old period. No need to think, it's okay. As per case law, the treatment also correct only. So as of now, we discuss the treatment of an what ma amalgamated company over. Now shareholder, we can discuss summary. Effect on shareholder. In the year of amalgamation, we are taken the capital gain exemption ma. So because the consideration only shares we are receiving and amalgamated company is an what ma Indian company. I am reading the summary ma. So next, so can you tell me in our example in 1011 we are enjoying the capital gain exemption, but in future we are selling the shares ma. What is the shares? Amalgamated company shares we are selling. Now we have to calculate the capital gain. For calculating the capital gain, period of holding from old cost, old asset cost, indexation we have to take it from new. That's it, simple. Clear ma? So why they are given this relaxation? Sir, why they are given the relaxation in the year of amalgamation, sir? If they are not given the relaxation, I will not shift to that company. Remember, here, why they are given the relaxation to the shareholder on the event of the what ma amalgamation? Because if I am shifted only, that is called as amalgamation under section 21B. 75% value of the shareholders needs to transfer from this company to this company. So if any capital gain, if you imposed, I will not shift from this company to this company. So that's why they are given the relaxation to the both the shareholders as well as amalgamating company. Then now we can discuss the treatment in the hands of amalgamated company. We can discuss the treatment in the hands of what ma? Amalgamated company. Remember. Now we are discussing the treatment in the hands of what ma? Amalgamated company. Okay. A Limited is enjoying now. What is a 21B condition satisfied? And it is an Indian company. They are taking the capital gain exemption. That means closing company is getting the what ma? Capital gain exemption. Sir, we can get the cost on the date. I didn't understood what you are saying. Message Mira, no issue. Next ma. Remember, here we are receiving the assets. Because all the assets and liabilities of the amalgamating company needs to become the assets and liabilities of the what ma? Amalgamated company. In that which year that amalgamation is happened ma? 1011. 1011. Now whatever that assets we are receiving, that in future we are selling that assets. No, definitely whatever that assets I am receiving, that's okay. But in future if I am selling, definitely I need to calculate what ma? Capital gain. I think you know this point very well ma. First of all, they are given the exemption to them. Repeated point, just I am explaining. So for transferor, it is a nothing but exemption. Shareholder also in this year no need to pay capital gain tax. But now we are discussing these provisions in the hands of whom? B Limited. B Limited receiving the some assets and liabilities, that assets are transferred in future to others. Now we are required to calculate capital gain. Now, while calculating the capital gain, remember, if assets are received from the amalgamating company, yes. Amalgamation is prescribed as per 21B, yes. Then amalgamated company also Indian company. So then period of holding, while calculating this capital gain period of holding old cost only, but indexation from new. But as per the case law, we can take the indexation of what old period also. New means what 1011 to 2425. What is a new means what 1011 to 2425. But here period of holding we can take from the what whether what, okay, in this year they are purchased 2004-5. Now we can take from old means what 4-5 to 24-25. Old cost means
whatever that amount incurred by this company for acquiring these assets, that is only old cost. Indexation new you have to take, that means 10, 11 to 24, 25. Remember, the asset is received and amalgamation 21B, amalgamated company is an Indian company. So if anything is not satisfied, all the things are new only. All the things are new only. Period of holding from new, cost new, yes, indexation new. If all the things are satisfied, what are the things are satisfied? Ma, same condition like an amalgamating company condition. What is that conditions in case of amalgamating company? Ma, first, Indian company, section 21B. It is an Indian company, and if section 21B is satisfied, the same condition we are imposing in case of what? Ma, amalgamated also. What is the condition? 21B condition, an amalgamated company is an Indian company, satisfied this one, and not satisfied, all the things we can take it as a new. So somehow if you understood, we can read it from the summary notes. Remember, A Limited is purchased the building in 4-5 months. So now two conditions are satisfied. Indian company, amalgamated company is an Indian company, and 21B condition. In the 10-11 amalgamation is happened. So that building is transferred. All assets we have to transfer. That's why building now transferred. So now that building is transferred by this amalgamated company in the previous year 24-25. Now we are required to calculate capital gain. Conditions are satisfied. Conditions are satisfied means nothing but what? All the things we can take it as an old, indexation but new, but as per case law we can take old also. Conditions are not satisfied, nothing but period of holding new, cost of acquisition new, indexation also we have to take new. So this is only a simple point. Can you tell me new means what? This is a new. Old means what? This is an old. So nothing but 452, this is an what? Old. So cost means whatever the old cost means whatever the cost incurred by the A Limited for purchasing this asset. New means nothing but at what value they have taken this asset. So just to give me some confirmation about your understanding. If you understood, then I can extend some more points in the amalgamation. Sir, we are not done anything. Just I'm given the impact or effect on the amalgamating company, amalgamated company, as well as we discuss the tax treatment in the hands of shareholder. I will share the summary notes also. You can use and you can remember. If you remember the conditions only, can you tell me conditions are same for these two? What are the conditions? The first condition is nothing but Indian company. Can you tell me? Indian company. And condition 2 is nothing but what? Section 21B. But here shareholder related conditions are what? Shareholder related condition 1 is what and the condition 2 is what? Yes, shareholder related condition 1 is nothing but yes, consideration only shares and amalgamated company, Indian company. Anyhow, 21B is also there. Here we have to check the 21B also. So they are not saying, but indirectly we have to check that also. Yes, amalgamation as per 21B, and it is an what? Indian company, and the condition 1 only we have to receive that what? Shares from the new company. So these are the only the points you have to remember. But now one important point I want to talk. One important point, important. Sir, one more main agenda is also there. A Limited are in losses. Now if that is an amalgamated with the B Limited, so now that loss can be set off and carry forward. Loss can be set off and what? Carry forward. This is a benefit provided in case of amalgamations. But many students are thinking, sir, this loss can be set off in all cases. No. Set off and carry forward of business loss. Business loss means nothing but what? Non-speculative. Not speculative, just only non-speculative. That means normal business loss and unabsorbed depreciation. These two losses only we can set off. Not a capital gain loss, etc. etc. Now, can you tell me, here also this company is closing, then business loss means a fresh period of 8 years, unabsorbed depreciation is unlimited. So like sole proprietary concern, sole proprietary to company, yes ma, firm to company, LLP, sorry, company to LLP, the same thing, 8 years fresh period and unlimited number of years unabsorbed depreciation. Now not in all cases ma, in these 4 cases only, then we can set off the business losses or unabsorbed depreciation of amalgamating company with the amalgamated company. With the amalgamated company, you can refer that if the conditions are satisfied. I am written that all the condition in simple manner ma, please check. If these conditions are satisfied, then only you can set off ma, not in normal way. Sir, they will give you the marks ma, their presentation always as per the case law only. Listen ra. Next. Remember what is the section number ma? 72A. 72A. So then we can set off for losses and the carry forward of loss of an amalgamating company with the amalgamated company. If in 4 cases, if these conditions are satisfied, then only we can do. Now, if amalgamation is happened, amalgamating company can, all the conditions are satisfied. Conditions means what ma? 2(1)(b) conditions. Section 2(1)(b) conditions are satisfied. Business loss can carry forward and set off for fresh period of 8 years and now unlimited years. In future, if any conditions is violated, now who are doing the set off ma? This is a closing company. They are enjoying the set off benefit ma. Now, in future, if the conditions are violated, in the hands of amalgamated company, example 10 lakh they are doing the set off and they reduce the total income. How much amount in this year ma? 10 lakh. Now that same amount will be deemed to be treated as income in the year of violation of what ma? Conditions. In the year of violation of conditions, remember. Sir, based on the 72A and 21B, based on 72A, what is that ma? Set off of losses. Yes, question number 2 I given. It is taken from the MQP of 3 attempts before, model question paper related question ma. So in CA level also this much of depth is not there. Conditions under section 21B and 72A both are not satisfied, then how we can do the treatment? They are amalgamated ra. X limited amalgamated with the Y limited. It is a closing company. Yes, it is nothing but what ma? Amalgamating company. It is an amalgamated company. But both the conditions are not satisfied, then how we can do? So in second case they are asking 21B satisfied, but 72A not satisfied. First you need to know what is the 72A and what is that 21B. So I will try to include, but after preparation of this workbook only, they released that institute workbook. That's why some questions only not covered. So to that extent of the past examination questions, MQP questions already covered in my workbook ma. It is nowhere given, only in MQP given. I am included in workbook. Okay. Next. So 21B and 72A both are satisfied. What is the tax treatment we have to follow? Sir, definitely it is difficult. It will take time. Every question they will give you for the 7 mark. So they will not ask all the 3 at once ma. They will give you that what ma? All the questions if they are asking for 14 marks they will give you. Otherwise they will ask any part. Sir, how to do? In handwritten notes, detailedly I solved the. So if conditions satisfied, what is the tax treatment we can give? If conditions are not satisfied, what is the treatment we have to provide? Case A. Next, case B. Yes, what is the treatment we are going to give? Next, case 3 also. What is the treatment we are going to give? Detailedly I written. If you are reading these are all the things, then you can do this question in a beautiful manner. So directly from workbook, maybe you, okay, to that extent you can understood, but why? What is the reason? That reason I mentioned in the handwritten notes, you can refer it and you can solve. That reason I'm expecting only, but they are not at all given from the last 2 attempts. But remember, so any one of the part they can give you. First you have to know what is a 2(1)(b), amalgamation definition, 72A. In case of amalgamation, if the conditions are satisfied, amalgamating company losses are unabsorbed depreciation. Losses means what, ma? Other than non-speculative losses, that is in business loss, other than non-speculative loss, can be carry forward and set up, can be set up and carry forward in the hands of amalgamated company for a fresh period of that time. Yes, satisfied. So here not satisfied, we can't carry forward. Here not satisfied, we can't carry forward. Here satisfied, we can carry forward and set up. Clear? This is a question you have to do on your own, ma. So now, so that's end with the amalgamation concept, ma. To be honest, I covered a lot regarding that amalgamation. Every point I covered. Point means nothing but you have to revise these conditions, ma. You have to revise these conditions in institute material totally, that is in the paragraph way. But 72A, if they want to do the setup, both the companies needs to satisfy some conditions. That conditions I am given in that yes chart way. So if you are saying okay, then I will proceed with the demerger. Otherwise, we can conclude the session for today. Demerger, I want to solve one problem also. Okay, within that, keep in that mind, and you can say whether we can continue or we can close. All of you try to give the reply. I think you are enjoying. Yesterday, I uploaded the pre-recorded video. On that occasion, I'm doing my, I think, posting activities. I mean, students, hard copies posting, and I'm watching that YouTube video. I'm doing that. I'm doing the personal activities like chatting, etc. Also, but now, so you are doing the same. Okay, that person can do the revision. Okay, we can read, and we can complete the dinner also, and we can take some walk also, and all the things you are enjoying. The only one thing, listening is very easy, right? So continuously talking for the 2 hours or 3 hours, that is an extreme difficult. Yesterday I felt it because pre-recorded session I uploaded, na, I enjoyed. Yes, ma. Now, shall we continue with the demerger? Now, last concept in this chapter, demerger. Listen carefully. So we can get the one question continuously in MTP, ma. So that's why demerger. Watching from Assam. Okay. Please check YouTube community post the detailed schedule with regarding the MCQ series and revision series also you will get. As per that schedule, I will upload that videos, ma. Please check. Now, sir, this is an theory I created last 3 years ago. Based on this only, you will get a questions. That means if you know this format, you can do questions, ma. Demerger is a very small concept, but it is a different from all. So why it is a different from all concepts, I will tell you. So sole proprietorship is converted into company. Now partnership form is converted into company. Okay. Next, private company or unlisted company converted into, yes ma, converted into LLP. In such a case, can you tell me business loss, if anything is there, that can be carried forward for that 8 years of fresh period. Here also business loss can be carried forward for that 8 years fresh period. And here also business loss can be carried forward for that 8 years fresh period. Unabsorbed depreciation for unlimited period. Unabsorbed depreciation can be carried forward for that unlimited period. Here also same. Yes, if that is an amalgamation also. Amalgamation also the same period. Full business loss 8 years fresh period. Unabsorbed depreciation for that how many years ma? Unlimited. Clear? Next point. Now only one thing is there, demerger. So some difference is there. Now we can discuss about the demerger. So these cases, how we can carry forward the losses and how we can do the set off of losses also okay. But now we can discuss about the demerger. Now, in 2008-9, in A Limited, Mr. X purchased how many shares ma? 1000 shares with the 20 rupees. The cost of acquisition is 20,000. Cost of acquisition is nothing but what ma? 20,000. Are who asked your cities? Listen. So earlier session I asked, okay, if you are given the reply, that's okay. Why you are given the reply? Cities, just concentrate. Otherwise we can take light. Okay. So in the 2008-9, this fellow invested 20,000 in this A Limited. Now that A Limited net worth is 200 lakh, they are doing that, managing the two divisions. One is in cloth, another one is in footwear. Two units or two businesses, they are running under the same brand, that is an A Limited. That is found extremely difficult. That's why in 2016-17, they are doing the demerger. Merger means combining. Now demerger means they are separated. Remember, A Limited doing the A Limited is taking that what mark cloth division. So that company is called as a demerged company. No one can lose their old name. They will continue with the old name and they are taking that one cloth business only. Now, B Limited is a newly formed company. That company is taking that footwear. That company is a resulting company. Sir, so now net worth means nothing but the total value of total assets minus outside liabilities. The total base they have in 200 lakh. But what is a newly framed company? This newly framed company this newly framed company needs some support from the old company. That's why they are apportioned the net worth in which ratio ma? 3:1 ratio. In an examination, definitely they will give you a ratio. So 3:1 means nothing but 200 is an apportioned in the 3:1 means 150 lakh as well as what ma? 50 lakh. 150 lakh as well as what ma? 50 lakh. Remember. Now, I am discussing the treatment here. Before demerger, I acquired from this company as a shareholder. But in 16-17, they are splitted into the two companies. Now, in 16-17 year, I want to know the tax treatment in the hands of demerged company. So, demerged company is given the capital assets to that what ma? Some capital assets. What are the capital assets? For footwear manufacturing, what are the capital assets are required? We are transferring all these things to the new company. So on that occasion, that is not treated as transfer. No need to pay the capital gain tax. That is not treated as transfer. No need to calculate capital gain tax. So simple, benefit only given. So we are encouraging always what ma? Amalgamations as well as demergers. So number of companies base or increases, we can collect the more and more taxes. They are splitting into the two companies. We want to encourage the demerger. Like I think if you have taken the practical examples, the many companies are their lifestyle. So nothing but before that the lifestyle is doing that cloth business also. Now that is demerged into the Max. That is one example as you know already. But now, so shareholder treatment I want to know. Sir, shareholders point of view, some shares will kept in the hands of demerged company. Some shares will be transferred to that what new company. Or one more point I will tell you. Sir, they will hold the shares of the 20,000 totally, but they will give you the new shares from the resulting company. For this demerged company shareholder, they need to issue that what new shares. Now, shares now exchanged with this company. Some of the share capital they will held some share capital they can get from the resulting company also. Now, the shareholder point of view also, that is not treated as transfer and no need to calculate capital gain in which year 16 17. Very important. In always in exam we are getting this question So what is that capital gain? What is that capital gain tax treatment in the year of demerger in the hands of transferor or in the hands of shareholder of that company? No need to pay any capital gain tax because it is not treated as transfer if the following conditions are satisfied. What are the conditions Whatever that assets are related to this company, we have to transfer that assets. Whatever the liabilities related to this resulting company, we have to transfer. And assets and liabilities needs to transfer that book value. This is a new point. And resulting company needs to issue the shares to that what demerged company shareholders definitely. Now, here also how much amount of the shareholders in value needs to transfer like amalgamation 75% in value. And the transfer of that undertaking should be considered on what basis going concern basis. Now we discuss the treatment in the hands of the transferor company, that is a demerged company in 1617. Now we discussed already treatment in the hands of the shareholder in the event of demerger year. Can you tell me? No need to pay capital gain tax if they are transferring the capital asset. If shares exchanged also no need to pay capital gain because all the conditions are satisfied. That is not treated as transfer. Now, this is an important point. Shareholder is selling the shares. Now, remember, he invested in 1819 in this, he invested in 1819 in this company. But after demerger, he having some shares in demerged company as well as in resulting company. Now, in which year they got the shares in resulting company 1617. But in 2008-9 onwards, he having the shares in demerged. But now, all the things are sold in previous year 24-25. Now, what we need to do So, old company shares also capital asset, new company shares also capital asset. Old company shares are held from which year 8-9. 8-9. Now, new company shares are sold from which year hold from which year 16-17. Now, 8-9 onwards, we haven't shares of this company. 16-17 onwards, we haven't shares of this company. But these are all the things are sold in which year 24-25. Which year 24-25. Now, we are required to calculate the capital gain. First, I want to talk about the shares in demerged company. What is a period of holding? Period of holding is 8-9 to 24-25 because in demerged company we are holding the shares from the 8-9 to 24-25. Sir, in resulting company also we have to take that old period only. Previous asset cost we have to, previous asset holding period also we have to include. Previous asset holding period also we have to include. Now, sir, total what is that cost he incurred for acquiring these shares 20,000 in which year 8-9. In which year 8-9. Now, that cost is apportioned in that net worth ratio. Some cost is apportioned to these shares and some cost is apportioned to these shares. But how ma? Shortcut is nothing but in net worth ratio we can apportion. But in exam, it will not work out ma. It will not work out. You have to follow. You have to follow. Yes, one formula in resulting company. What is the formula? Total cost of acquisition 20,000. Net worth of resulting company 50 lakh. Net worth before demerger 200 lakh. That is an 5,000. That means out of 20,000, 5,000 cost is a portion to what ma? Resulting company. Then remaining balance only in the hands of which company ma? Demerged company. Sir, this is only the difference in the demerger. Cost of acquisition of an shares. Earlier we purchased, but how much cost we allocated this company shares, how much cost we can allocate to the resulting company shares, by using this formula only we have to calculate. Formula is there for resulting company and there is no formula. The balancing figure you can take directly in the hands of demerged company shares. Indexation here new ma, but in our problem, in our notes, we are taken from the old only as per case law. In our workbook also, I am taken from old only as per the previous examination suggested answers. But here you can take from old because you are holding the shares from 8-9. Sir, this is only the point. Mr. X purchased that all the things 8-9 in 16-17 shares splitted into the two companies and cost also we have to split by using the formula. So can you tell me this company period of holding from the 8-9 to sold year 24-25, this is also same period we have to take, but remember indexation also we can take from the old as per case law. Otherwise as per the theory is nothing but what ma? New. Manjula Jesa's case law only ma, you no need to write it down. So if you have written anything wrong also, that is not correct. That's why no need to write it down anything. Please check. Are you clear ma up to now? Sir, by using these handwritten notes, you can decode anything also. That's why please refer these notes first. Okay. So just I want to refer the two questions ma. Demerger concept is over. But in demerger, I will tell you one more ma. So then what about the loss? Set off of and carry forward of losses of unabsorbed depreciation ma. 72A section only. Business loss means non-speculative. Sir, loss is related to example. Loss is totally related to cloth, sir. Directly you can allocate that to the cloth. Sorry. So cloth they will take. So can you tell me? Footwear related loss is there ma. That is directly related to whom ma? Resulting company. Directly you can attribute that loss and you can give it to that what ma? That. Next. We can't apportion the loss directly to the resulting company. Then in net worth ratio, we can apportion. In net worth ratio, we can apportion. In net worth ratio, you can apportion. Now, remember. So already we have written one thing. In demerger, in demerger, business loss for remaining period. Why? What is the reason? Not why you are not given for the fresh period, sir. Why you are given for the remaining period? Unabsorbed depreciation unlimited only. Why this difference? Remember, in all the cases, predecessor is closed and the successor is doing the business. But in this case, in demerger, demerged company is also there and resulting company is also there. So that's why which one we want to follow ma. This is only the difference. Maybe they can highlight ma. In all the cases, fresh period of 8 years, unabsorbed depreciation, unlimited. All the cases. But in demerger, business loss for the remaining. Example, demerged company already enjoyed the business loss for 4 years ma. Now, the remaining 4 years only they can take. Totally 8 years. Remaining period means total out of 8 years. Already they are enjoying the carry forward for 4 years. The remaining 4 years only they can take. Are you clear ma up to now? Now in workbook, I want to solve the two questions. Ma. The reason is there. If I am not solving now, tomorrow I can receive the nearly 50 to 60 messages. So I want to solve the 3 questions directly. 3 questions I will solve. Ma. Listen carefully. In short span of time, I want to solve these questions. Ma. In short span of time, I want to solve the questions. Listen carefully. Sir, same, they are given the not solving the detailedly, just I am giving the overall view. Here the same case law, that means created, one company is there that is a demerged and a shareholder is there. So they are asking, what is that impact on the, yes ma, demerged company. I know that case law. So what is that ma? Demerged company and resulting company. This is a demerged company ma and resulting company, this one. What is that? Transaction of demerger attracts any income tax liability ma? No. Why? This is not treated as transfer. No need to calculate the capital gain. And what about the shareholder, sir? Shareholder also will not pay any tax on receipt of shares from the resulting company. In the event of demerger, no need to pay the capital gain tax by the companies also as well as shareholder also. Now they are asking the question, in future, if you sold the shares, then what is a capital gain? That you know already. Can you tell me? He is selling the which company shares ma? Resulting company shares. If you are transferring the resulting company shares, what we need to do? If you are transferring the resulting company shares, yes, period of holding older. Yes, this is a cost of acquisition apportionment. Indexation in this question they are taken old as per case law they are following. Yes, but remember, they are not taken indexation. What is the reason, ma? Transfer date by this fellow, transfer data is nothing but by this fellow shareholder on or after 23/7/2024. Even though that is a long-term capital asset, we can't get the indexation. We can't get the what ma? Indexation. So in future subsequently he is selling the shares of what ma? Resulting company. So upon the receipt of shares in the event of demerger, not taxable. In future he is transferring, he is selling his shares. Now we need to calculate capital gain. Many students will ask in tomorrow's doubt session this one only. So that's why I am given the clarity. Why we are not calculated the indexation here? Because the transfer date on or after the date, no need to calculate indexation. Even though the asset is a long term. They are asking one more question. Sir, sale of shares by NK. Sir, these two companies are taking the exemption, ma. What are the two companies, ma? Demerged company as well as resulting company. In the event of demerger, they are not paying any tax. Now, NK is transferring the shares in the previous year 24-25 because of the shareholder transferring the shares. Whatever the benefits are availed, that is on what ma? Capital gain exemption their benefit. That will create any effect? No, because there is no lock-in period conditions in case of demerger. But in these cases, there is a lock-in period conditions also. But in demerger, shareholders can continue or they can sell the shares also. It will not create any impact on these companies. Already they have taken the capital gain exemption. Still that is continued. There is no reversal of that capital gain condition. Now, the shareholder can take any exemption. Yes, here he calculated the capital gain 6,50,000, sir. Now from this, yes, he can claim the 54F exemption. Means what ma? If he purchased any residential house property, yes, within the 1 year from the date of transfer, or sorry, within the 2 years from the date of transfer, before 1 year. For purchase, can you tell me what? transfer before 1 year, after date of transfer 2 years. In case of construction after the date of transfer 3 years, if you purchased any residential house property, from this he can get the exemption under section what ma 54F. That is only the point they are given. Is there any capital gain exemption he can get as per the provisions of Income Tax Act 1961? Because the transferred asset is any asset other than residential house property. Remember 54F, transferred asset is what ma any asset other than residential house property, that is also long term. Now if you are invested that proceeds in that what ma residential house property, then you will get 54F exemption. No indexation not applicable, Jatin. Student asking the doubt, sir. Sole proprietor question we solved. I think sole proprietorship or partnership, I think. This question we solved. But transfer happened on what date, ma? Before, here, transfer happened before 23/7/2024. So that's why we calculated indexation here. Clear? Resident individual is transferred, that's okay. That is an exception. Grandfathering benefit they are given. Yes, ma, on or after this date. That means what ma 23/7/2024 on or after. Who can take the indexation ma? Resident individual or resident HUF if they are transferring the land or building purchased before this date, transferred on or after this date. Where it is gone, ra? Remember, indexation facility is not available in this case because it isn't nothing but what ma shareholder. This isn't shares. Individual only hero, but he holding the what ma shares. That's why indexation not available. Indexation is unavailable. That is like an option only. If you purchase an immovable property before this date and transferred after this date, resident individual or HUF, if they having that land and the building, then only they can take that indexation. That is also optional. Ma. Without indexation, with indexation they can calculate whichever is beneficial. They can follow that. So please refer the capital gain. In capital gain, I will tell you the amendment. But remember, on or after this date, what is the amendment? Ma? We can't take the indexation. So, but indexation can be taken by whom? Resident individual or resident HUF, resident individual or resident HUF. If they are purchasing that immovable property before this date and transferring after that date, then only they can get the indexation. That is also optional, ma. First they can calculate without indexation, with indexation, what is the benefit they can follow, whichever is beneficial to that SSE. Now, second question I want to solve, ma. This is our previous June 2023 examination question. For 7 marks they are given same question. But here, every time if demerger is happen, we have to split between the companies, ma. One is a demerged company, another one is a resulting company. Share capital needs to be split between the companies. But in this question, totally share capital allocated to resulting company. Why? They are not given the base. They are not given the base. What is it? Many students are asking, sir, net book value of assets of textile division before demerger 50 crore. This is the net book value. Net book value of asset means what, ma? Net means what, ma? Assets minus liabilities value given. This is the total book value given of the same company. Sir, total book value is 150, sir. Total book value minus liabilities is removed. Net book value is nothing but liabilities if removed 100 lakh crores, sorry. Total book value 150 crores minus liabilities if I am removing, net book value of asset is given for one company only, that is a textile division only given. Other company related shares are not given. How you can apportion that share capital or cost of acquisition between the two companies, ma? So that's why here, whatever the cost of acquisition is there, directly they are given to that what, ma? Resulting company. So this is a resulting company. Total 8,40,000 is allocated to the resulting company. Reason, net worth ratio is uncertain. So that's why they are taken this assumption, baseless assumption, based question, but they are given in suggested answer. They are given the one justification also. So that's why I don't want to change. Again, they can give also. I don't know. That's why remember here net worth ratio is given now. Then we can apply this formula and we can do. But here they are not given the proper information about the demerger as well as the resulting company. They are given that only with respect to that one company. Students are asking, sir, they are given, sir, you don't know. But please refer. This is a total book value. This is a net book value of the same company they are given. What about other company? Other company information I know, then I can use the denominator and the numerator. But I can't use it. That's why we are taking that one assumption. The total cost of acquisition is splitted to that what, ma? Resulting company, and they are doing the problem. Yes, this is only the thing I want to say. And your thinking is correct, but here asset is immovable, na? Then you can take. But here asset is in shares, ra. Jatin, please remember, your asking is correct only, but sir, if transfer is done by the sole proprietor, resident individual or HF, but for which asset we can take indexation? Only immovable property. Only immovable property. Here asset is nothing but what, ma? Shares of the company. That's why we can't take indexation anyhow. Okay, 1 minute discussion. 1 minute. Remember, ma? 23/7/2024, before resident individual or HUF purchased the immovable property. Immovable, that means land, building, or both. Ishwar, you can take any ratio also, but that ratio needs to be matched with the ICMA answer. That's why. That is not correct. So as per that presentation, that is not correct. No need to do anything, ma. And before he purchased, ma, then after, on or after, if he transferred that, he is purchased and he is transferred on or after. Now, so if that is a long-term capital asset, then indexation, with indexation you can calculate, without indexation calculate. Yes, whichever is beneficial for you, you can follow that. In this case only they are given the with indexation benefit, not for anything. So here we have to check the resident individual or HUF. Purchased asset is before this date and the asset is immovable. Sale is done after that. Then you have to check whichever is beneficial to that SSE, then he can do. Why, sir? Because they are given the different rates, ma. With indexation, yes, ma, with indexation, you have to pay 20%. Without indexation, yes, they are given the concessional rate 12.5. Yes, you can follow, and beneficial one you can take. But while you are showing the total income, computation in that long-term capital gain amount, always we have to show without indexation only. This is a point you should remember. Yes, for tax computation only they are given the what, ma? For tax computation purpose only they are given the option. Yes, what is that, ma? Option. But while you are showing this amount in the total income, always you have to present without indexation. Why? We want to increase the total income. Yeah, without indexation it will also increase. It is an amendment we can discuss in the capital gain also, remember. In this case only we can get the indexation. Remaining cases they are stopped at that indexation. Yes, any other asset case now. Yes, other than what, ma? Immovable property like shares, gold, etc. we can't take indexation. Now last question, listen. Last question, listen. I am expecting this question again. So past examination question in workbook, yes. I already told one question I will explain at the end of the session. In that beginning of the session I told, now this is only the question. Tiger Limited is engaged in the manufacture of textile garments and automobile. Yes sir, textile garments as well as automobile parts. They haven't two things ma. Yeah. Now, sir, automobile parts is an always in the losses. The management wants to divest, that means the close are sold the automobile spare parts things to the, yes, for the lump sum consideration on this date. Lump sum consideration and the net worth also given. Now we can do the slump sale, that is in long term only. Why ma? Since last 10 years this one is there. So now 500 minus 340, on that we can follow transfer date is before or after ma? Before or after? Before 23/7/2024, we can apply the 20% and plus we can apply the cess also. And I think, can you tell me, we can apply the surcharge also ma here, 7% surcharge also. And we can apply the health and education cess. This is a slump sale related tax you will get. Okay. Long-term capital gain, this is a tax liability. But now you have to do the tax planning. So they have two options, demerger as well as what ma? Slump sale. I think you know. So now Tiger wants to hold the one thing, that is on what ma? Textile. Tiger want to take the textile. And one new buyer is there, that is I think Lion Limited. They want to take these things as a demerger concept. Yes ma, what is the division they want to take? Automobile. So what is that advantage ma? If any demerger is happened, capital gain no need to pay if the assets are transferred from the demerged company to demerged company to resulting company. Can you tell me here, this is a resulting company, this is what ma? Demerged company. Sir, if you are going for slump sale, you have to pay this amount as a tax. If you are going for the slump sale, you have to pay this amount as a tax. But if you are going for the demerger, no need to pay any tax. Can you tell me which one is an advisable ma? It is an advisable preferred demerger over the what ma? Slump sale. They are given this question for 7 mark. They are given this question for 7 mark in December 2023. Sir, years, you can verify, yes, whether whatever the years I am saying, whether it is correct or incorrect also, you can verify on your own. Clear ma? Maybe one or two attempts, maybe I can say 7 marks they are given ma. So if you know the concepts overall, you can write slump sale, this much of tax, demerger, no need to pay the tax. Which one isn't better? Demerger only the better. Clear ma? So these are only the concepts related to chapter related to business restructuring, reconstruction as well as things ma. Yes, please try to revise on your own. Please try to revise on your own also remaining problems. Thank you. Have a nice day. So I don't know. So till the last, I think continuously 3 hours you are listen the concept. Yes, no problem. After that you can try to practice some problems also. Definitely you will get what you are expecting in DT, definitely. So for namesake or for your satisfaction purpose, I am not saying, it is a fact only. Try to do that hard work till the last day of that examination. Definitely you will get the best marks only. Don't demotivate. No one can know all the provisions in every chapter, in every subject. So whatever you learn already, please try to revise and you can go for exam. Thank you. I will share this PDF also. Give me 15 minutes time. Then after I can say. Something is big is not for your. So just I do a short video. So I taken a Canva premium. That's why I made a video. So nothing is there. Nothing is for that June 2024 students. That is not about your preparation also.
I'm not talking anything about the June 2025 students, okay? That is not related to you. So that may be related to the future batches. Thank you. Continue your preparation. That is not related to the revision batches or anything. So that is not at all useful for you. Continue your preparation. Thank you. Have a nice day. Tomorrow we can meet with a new chapter. You can order CMA aspirant. మాకు లేదా సార్ స్వీట్ ఏంట్రా, స్వీట్ కావాలంట, తిని పడుకోండిరా హ్యాపీగా. సో నౌ ఐ థింక్ 10:45, ఇట్స్ 11. ఓకే, తిని హ్యాపీగా పడుకోండి. సో థ్యాంక్ యూ, హ్యావ్ ఎ నైట్. I will share PDF, ra. Give me 15 minutes time. After that, I will share. Thank you.